On Wednesday, National Treasury confirmed it's going ahead with plans to introduce an expat tax amendment to the South African Income Tax Act by March 2020. Let's find out how this will affect the economy. I'm joined by tax consulting South Africa legal manager, Jonty Leon. Jonty, good afternoon. Good to see you.
Thank you very much for having me.
I want us to start layman's terms, please.
Sure.
What is expat exemption? First of all, what is that? Explain to us.
So in terms of our Income Tax Act, we have an exemption under Section 10. It's called Section 10102, and that means South Africans that work abroad, that meet certain requirements and are earning a foreign employment income are able to currently fully exempt their foreign income from tax in South Africa. The problem is that's now changed. And the new amendment, or the amendment now states that you need to meet the same requirements, but only the first R1 million will be exempt from tax in South Africa. Okay. Everything above R1 million would be taxable.
That's R1 million a year.
A year.
Of your income will
Correct.
Exempt. Okay, so I go overseas. When I get there, I get that job. Who do I pay tax to? Where do I pay tax? Do I pay tax in the country I'm working in? Normally, what's happening now? What is the state?
Yeah, so what often happens is you are paying tax in the country that you're in already, and that's why you're able to exempt your foreign income from tax in South Africa.
So does this mean I'll be double taxed now?
Well, that's the issue. Is there the possibility of double taxation? And yes, there is a possibility of that. That's why we need to look at mechanisms to stop the double taxation, which there are a few to use. But the problem is it does bring up that issue.
Okay, now of concern to you, there's a possibility of taxation or the SARS taxing certain fringe benefits as well, if an expat. Talk to us about those fringe benefits.
Sure.
And why is it a problem to you?
So what's so important is that often, let's just talk from an Africa example. We're sending a lot of South Africans that are highly skilled into Africa for, let's say, mining. And with that, they are in some countries that are not the safest. And what they need possibly is security to be able to just move around in the country. That is now going to be taxed as a fringe benefit in South Africa, even though it's actually a necessity to be able to work there. Other examples are like housing or schooling. The problem is, with these fringe benefits, they're all included in that R1 million exemption, which means that, that is included, and you often will very quickly be over that R1 million mark.
Yep, and it seems to me that what will happen as well is that your employer now, it makes it more difficult for those overseas employers to want to employ South Africans because it's going to cost them more, doesn't it?
Absolutely. It's such a negative impact that we're going to see because South African expats that are highly skilled, that other countries, other jurisdictions want to employ them, they'll be far too expensive to employ. So what will happen is we're going to lose out on South Africans being employed, and they're going to go and look for other jurisdictions that are less punitive with their tax.
Maybe this is one way to keep in the skills here, because look at the ESCOM scenario. We're now calling for some of the engineers to come back.
Sure. So that is one way to look at it. I fully disagree with it, though.
That was a joke, by the way. So listen, here's the other side of all this. How would SARS actually administer this? Because surely this must be difficult to do.
It's going to be an absolute nightmare. At National Treasury on Wednesday, on the 6th of March, there was this session to basically discuss how this is going to work. And it seemed that there were so many issues that were brought up that we could not get answers on. This is going to be an absolute nightmare, I'm sure of it, for SARS, for the expat, for the employer.
Because if you're already being taxed there, then SARS would have to keep, okay, I know you're there, you're earning $20,000, a month, whatever it is. Who then, I've got to be in touch with your bank. How do I even know you're earning $20,000 a month? All of those things need to come into a question.
Absolutely. So what we've got currently and globally is something called the Common Reporting Standard. And with that, banks and tax authorities around the world are sharing information. So that means there's nowhere to hide. And often I get clients speaking to me about how will SARS ever know? And the point is the information is being shared. So SARS will know. They might not catch you now, but they will
the banks
catch you.
do share information.
Absolutely.
So that's the easy part.
Yeah.
It's the getting the money from that point. I want you just to explain to us, also from a layman's point of view, because this is not a common subject, tax residency. Explain to me what that means.
So tax residency is completely separate from your citizenship or where you're currently actually residing. In our Income Tax Act, we've got two tests to look at how you're a tax resident. One is a days test to see how many days you're spending inside South Africa, and if you meet those requirements, you automatically become a tax resident, meaning you must pay tax in this country because, and in South Africa on your worldwide income. If you're a tax resident, you would pay in South Africa. The other test is the Ordinarily resident test, and that looks more at your intention and where you want to be tax resident, and then objective factors that prove that intention.
Okay, this is where financial immigration comes in, where if I'm a movie producer and I make my money in the US and I come live in South Africa, do I get any benefits?
So it's not as simple as you financially immigrate and you're fine. You need to meet the requirements of our tax residency tests to be seen as non-tax resident. Financial immigration then confirms that position. And once you've done that and you're seen as a non-tax resident, you no longer need to worry about this expat exemption. It no longer applies to you. Your foreign income is then safe from tax in South Africa.
Is that what you're advising people to do?
If they meet the requirements, absolutely.
But then the SARS lose out. We lose out from our citizens.
Absolutely. That's exactly what's happening. And that's the problem. SARS hasn't looked far enough ahead. They think that by implementing this new law, they're going to be gaining more revenue from tax. The problem is, and from just speaking to clients, they're deciding, I'm not coming back to South Africa. I'm formalizing that I'm a non-tax resident using financial immigration, meaning I'm not coming back.
Wow, that is quite scary, though. All right, thank you so much, Jonty Leon, for explaining a lot of things to us.
Absolute pleasure.
And when will when will this become into law?
Effective from 1 March 2020. It was promulgated in December 2017, so it's already law. It's just got an effective date of 1 March 2020.
Okay, so there's a little bit of time left.
Yeah.
Thank you so much. That's Jonty Leon, the legal manager at Tax Consulting South Africa.